What's up? It's MrConectr. Back with another video today. Yesterday, we started going over this post from Marshall Hayner about ISO standards being built into the core of Metal blockchain and the XPR network versus banks and entities using an overlay of the ISO standards. So let's check out the difference between the two. First, let's go over this from yesterday from Marshall Hayner, CEO of Metallicus. ISO 20022 is an international standard for payments and settlement between banks, institutions, and blockchains. That's interesting right there, using a standard to settle between blockchains, as well as banks and institutions. This is a core component of the technology that will merge TradFi with DeFi. Metal blockchain and XPR network are the only two blockchains in the world that have it live. So let's check out why it's important to integrate it into the blockchain. You know, before this post, I was thinking that, you know, banks and entities, fintechs will be using it as an overlay, and it's not built into it. But we've got word here from Marshall that it is built into these, and these are the only two blockchains in the world that have it live. So are they setting the standard? Is Metallicus setting the standard for this, guys? And why is it important? Before we get to that, I'll just show you the landing page for like Metal blockchain. They've got a testnet built into the website here where you can see right here the bank identifier code. That's an ISO standard. The international bank account number, that's an ISO term. It shows the amount you can send, let's say 15 cents. And the collateral, we're going to use metal as collateral. You can see there the price of metal. And it's going to take 0.33 metal as collateral to send this amount of US dollars, 15 cents worth of US dollars, with the bank recipient and the sender BIC numbers. So it is built into this platform. So why is it important? I asked Grok here, explain the difference and benefits of having ISO 20022 standards built into the Metallicus blockchain versus a bank or fintech using blockchains with ISO messages. So Grok wants us to understand first that the ISO standard is developed by an international organization for standardization, the ISO, for electronic data interchange in the financial industry. It provides a structured, intensible messaging format that allows for a richer, more detailed data in financial transactions such as payments, securities, and trade services. Unlike older standards like SWIFT MT, ISO 20022 uses XML-based syntax, though it's syntax agnostic, to carry comprehensive information, enabling better automation, compliance, and interoperability between the systems. Metallicus blockchain with its native ISO integration. Metallicus through the Metal blockchain Layer 0 platform designed for financial institutions incorporates ISO standards directly into the blockchain's core protocol. So now we're back to, you know, when all this ISO stuff started coming out with it, everybody was calling it ISO coins. You know, this coin is ISO, this coin is ISO. No, it's the entities that use the coins in ISO messaging. But now we're going back to, we finally got it built into the core protocol. So what's the benefit and how is this going to be used? This means that the blockchain's transaction data structures, messaging, and processing are inherently aligned with the ISO 20022 from the ground up. For instance, transactions on the Metal blockchain are formatted natively in ISO compliant structures, allowing seamless handling of financial messaging like payment instructions without additional translation. It supports features like digital identity, KYC AML compliance, and BSA requirements built in, with ISO standards enabling standardization, on-chain documentation, and transparent ledgers. A live demo is available. Yeah, we just looked at that. This native approach positions Metal blockchain as a banking-focused infrastructure, bridging traditional finance, TradeFi, with decentralized finance, DeFi, by making the blockchain itself compliant with global financial messaging standards. And then now let's take a look at banks or fintechs using blockchains with ISO messages. So in contrast to Metal blockchain, many banks or fintech companies use general purpose blockchains like Ethereum, Solana, Hyperledger, so on, as an underlying ledger or transport layer, while layering ISO messages on top of these crypto transactions. This overlay method involves composing ISO formatted messages and embedding them as payloads in blockchain transactions, smart contracts, or via off-chain oracles. So they're embedding them, requiring additional middleware software to encode, decode, and map blockchain's native data formats to ISO 20022 when interfacing with external systems like payment rails like Swift or FedNow. So all these banks and fintechs are going to be requiring additional middleware or software, like, I guess, RippleNet, different things like that, Temenos, so on. Examples include, PayPal, all kinds of things. Examples include banks piloting blockchain for cross-border payments where ISO data is sent over the chain but not inherently part of this protocol. This approach treats blockchain as a neutral database or a settlement layer, with ISO 20022 handled at the application or integration level rather than the protocol level. So it's like an add-on. So the key difference is the primary distinction lies in the level of integration, native versus overlay. Native is Metallicus in the Metal blockchain and also the XPR network, the layer 1 to this layer 0. ISO is embedded inside the blockchain's architecture. All on-chain activities, transaction creation, validation, and storage use the ISO-compliant data models by default. No external mapping is needed. The blockchain speaks ISO 20022 fluently. And the overlay approach, which our traditional bank and fintech are using, ISO is applied externally. The blockchain handles generic data, and ISO compliance is achieved through custom adapters or protocols built on top. And this will require translation between the blockchain's format and the ISO 20022, introducing potential friction points. So that's not good. Friction. I'm an XRP guy to start with, and we know Schwartz talks about reducing friction. So adding it on top as an overlay adds friction points, which is going to give Metallicus a good advantage here, guys, from what I'm seeing. So let's look at a couple of the differences. We've got the aspect, the native integration on Metal versus the overlay messaging on blockchains for banks and fintechs. So the integration level, protocol level for Metal blockchain, the core of the blockchain. Overlay is the application level, an add-on layer, which again introduces friction. Now, I don't know, it might not be much friction, depending on the application, I assume. I'm not saying that this might not have advantages. It might be fine to use an overlay. I'm just bringing out the points to you guys. the data handling, the transaction is inherently structured in ISO 20022. And in the overlay, message is formatted separately and embedded. So the interoperability with Metal is direct with financial systems, FedNow and SWIFT. We know that Metallicus is a service provider handling liquidity for FedNow. It is an option. There's several service providers, but there's only one that handles liquidity and has its own cryptocurrency. That's Metallicus. We saw Bank Social does not have the liquidity check mark as a service provider, although it has its own crypto. And with the banks and fintechs, the overlay model, it requires middleware for mapping. For Metallicus, the complexity is low. It's built in. And for the overlay model, it's high. Custom development needed, which there's a lot of great development, a lot of great custom development out there. But again, that is kind of a third-party deal there, an add-on, middleware, right? The performance is minimal with Metallicus. And for the overlay model, it's higher. Needs encoding, decoding, and steps. And that is your friction right there. And the compliance is automatic with Metal. Dependent on external tools with the overlay model. The benefits of native ISO and Metallicus blockchains. Having ISO built into the blockchain offers several advantages over the overlay approach, particularly for financial institutions seeking efficiency, compliance, and scalability. Enhanced interoperability and seamless integration. Native support allows direct connectivity with traditional financial networks without these intermediaries. For example, the Metal blockchain can process cross-border payments or regulatory reporting in a format already understood by banks, reducing integration time and cost. In contrast, the overlay methods require custom APIs, leading to silos or compatibility issues. Another advantage is improved efficiency and cost saving. By eliminating the translation layers, native integration enables faster transaction processing and automation. ISO-rich data fields are natively handled, minimizing errors and manual interventions. This can lower operational costs. There's no need for redundant. Lower the cost by 20 to 30% in payment processing. And there's no need for redundant format steps seen in these overlay setups. Superior data quality and transparency. Native ISO ensures on-chain data is structured and granular, supporting advanced analytics, fraud detection, and audit trails. Metal blockchain's transparent ledgers provide immutable ISO-compliant records, which is ideal for compliance-heavy environments. Overlay approaches may lose data fidelity during the mapping and increases the risk of inconsistencies. Another advantage is stronger compliance and risk management, with these built-in standards simplifying adherence to regulations like BSA, AML, and KYC. The automated reporting, Metal blockchain meets the standards for risk management and regulatory alignment, reducing compliance burdens. In overlay scenarios, these compliance relies on third-party tools, highlighting the vulnerability to errors and audits. Anytime you introduce third-party, you create more vulnerability, guys. That's why I like the XPR ledger DEX built right into the native protocol. You don't have a DEX built on top of the XRP. And yes, I love XRP and XPR and Metal. I love all of it, guys. No tribalism here. If your blockchain works great, we're going to check it out. It serves a purpose. Future-proofing scalability is another advantage. Native integration makes the blockchain adaptable to evolving standards, such as these new messaging types. It's designed for high-volume financial use cases, like stablecoin issuance and escrow, scaling without performance hits from the overlays. This positions Metallicus blockchain as a plug-and-play solution for banks transitioning to DeFi. Make it easy on them, right? Another advantage, security and reduced errors. With no external conversions, there's less exposure to data tampering and misinterpretation. ISO structured format enhances security through better validation, contrasting with the overlays where mismatches can lead to failed transactions or disputes. Wow. Yeah. That's a vulnerability there. Overall, Metallicus' approach accelerates the adoption of blockchain and regulated finance by minimizing barriers, while the overlay method, though flexible, adds complexity and overhead for banks and fintechs. So there you go, guys. Metal blockchain and the XBAR network. Making moves in the space. I thought this was important to clarify the difference between the overlay model and it being built in to the network. So there might be applications for both though. But you can see the streamlined one definitely has its advantages. All right, guys, we'll check you on the next one. Stay bullish. Don't sleep on Metallicus. MrConectr out. Enjoyed it, guys.